Breaking news for UK pensioners. HMRC has started recovering winter fuel payments, and for some people, that means seeing around £17 disappear from their monthly income. The biggest surprise? Many didn't realize it would happen until they checked their pension payment. If your annual income is over £35,000, these new tax code changes could affect you. But don't panic just yet, because not everyone has to repay the money. In this video, we'll explain exactly who is affected, how the repayments work, and the simple check every pensioner should make today to avoid costly confusion. Before we begin, if you enjoy straightforward UK pension, state pension, DWP, and HMRC updates explained in plain English, don't forget to subscribe and turn on notifications. We publish regular updates to help you stay informed about the latest changes that could affect your retirement income. ***. For many pensioners, the winter fuel payment has long been a welcome source of support during the colder months. It helps cover rising heating bills when energy costs often increase. For years, many people received the payment automatically without worrying about paying it back. But the rules have changed. During the 2025-26 winter, millions of pensioners still received the winter fuel payment automatically. However, under the revised policy, people whose annual income is above £35,000 are no longer entitled to keep the payment. Instead, HMRC is recovering the money through the tax system during the 2026-27 tax year. This has surprised many pensioners because they didn't receive a bill asking them to repay the money. Instead, the recovery happens quietly through a change to their tax code. As a result, some people have noticed that their monthly pension income is lower than expected. For many affected pensioners, the reduction works out at roughly £17 each month. While that amount may not seem huge on its own, over the course of a year it adds up to around £200. At a time when many households are already dealing with higher living costs, even a relatively small monthly reduction can make budgeting more difficult. So, how exactly does HMRC recover the payment? Rather than asking for a separate payment, HMRC adjusts your tax code. This reduces the amount of tax-free income you can receive before tax is deducted. As a result, you pay slightly more tax each month until the full winter fuel payment has been recovered. HMRC has provided an example to explain how this works. A pensioner with an annual income of £37,710 receives income from both the private pension and the state pension. After receiving a £200 winter fuel payment, HMRC adjusts the individual's personal allowance through their tax code. That adjustment increases the amount of tax collected throughout the year, allowing the £200 payment to be recovered gradually instead of all at once. For basic rate taxpayers, this commonly results in deductions of approximately £17 per month. If you're wondering whether you can simply repay the money in one payment and avoid monthly deductions, the answer is generally no. HMRC has said that pensioners whose repayment is being collected through their tax code cannot normally choose to pay it back early as a lump sum. People who complete a self-assessment tax return will repay the money differently. Instead of tax code adjustments, the winter fuel payment is normally included as part of their annual tax calculation. For online self-assessment returns, the deadline is January 31st, 2027. Anyone submitting a paper return has an earlier deadline of October 31st, 2026, and should ensure the payment is included if it does not already appear. Not every pensioner is affected by these changes. If your income is below the repayment threshold, you will generally keep your winter fuel payment without needing to repay it. The recovery only applies to those whose income exceeds the qualifying limit under the current rules. Because these deductions happen automatically through tax codes, it's also important to check that your tax code is correct. Mistakes can happen from time to time. If your circumstances have changed or you believe your income has been calculated incorrectly, contacting HMRC or reviewing your personal tax account can help clarify whether the deduction is accurate. Unfortunately, major policy changes like this often create opportunities for scammers. HMRC has warned pensioners to remain vigilant against fake emails, text messages, and phone calls claiming that immediate repayment is required. Criminals frequently impersonate HMRC to obtain personal information or bank details. Remember, HMRC does not ask people to provide bank details or make repayments through unexpected text messages or emails. If you receive a suspicious message claiming to be from HMRC, do not click any links or provide any information. Instead, verify any communication using official.gov, UK services, or by contacting HMRC directly through official channels. The key takeaway is that if your income is above £35,000 and you received a winter fuel payment for the 2025 to 26 winter, you may notice a reduction in your monthly pension income during the current tax year because HMRC is recovering that payment through your tax code. While many affected pensioners are seeing deductions of around £17 per month, the exact amount depends on the size of the winter fuel payment you received and your individual tax situation. Changes to pension rules and tax policies can sometimes be confusing, especially when they affect your monthly income without a separate invoice arriving through the post. That's why staying informed is more important than ever. Before assuming there's been a mistake with your pension payment, take a moment to check your tax code and understand whether these new recovery rules apply to your circumstances. A few minutes today could help you avoid unnecessary worry and ensure you're receiving exactly what you're entitled to under the current rules.